for me today, but I just need a little more movement before I start taking anything. If I see something nice, I might make a move, but like I said, my powder's limited right now just because I'm sitting on things waiting for them to finish up their play. Hey, Birdie, how are you doing this morning? Hope you're having a good day. If you have any more of that info, Birdie, on that EX or the XELA stock, I think you said it was a stock buyback. I did get to hear that. Can you send me some of that info? Samuel Rodriguez. No, that is not the case. Westside did move on to do his own thing. We still love him here. We still appreciate him here. He's welcome back anytime he would like. But that is not the case, and I just want to make sure that's clear. I don't know any more I can say besides that, in the sense that he's moving on to his own thing, and we wish him 100% the best. 100%, and every single one of us here definitely supports everything he's moving on with. Neil Stewart, good morning, bud. Lobo says, I'm drinking a Rockstar, just the mixer, no vodka. Not that time yet. Got to wait for the PAL meeting probably to add that in. No problem, Samuel. Just wanted to make sure I was clear about it. I'm glad that you're here with us today. Old Raven Farm. Oh, thank you, Birdie. Much appreciated. Anybody holding the XELA? Birdie just posted a link there in the chat. It's for the news on that, I believe it was a stock buyback. I'm going to be reading that here in a few moments to kind of make sure that my shares are okay. It is up 26% on the day, and like I was saying, it was trading, I believe, at 38 cents 2 days ago. So anybody who did buy in, not me, who got in down there at 38 cents, made some nice tendies or is holding some nice tendies right now. You basically doubled your investment, so good job. And thank you for help propping my stock back up. All right. Let's see here. I got no fingernails left, guys. I was chewing my fingernails off, so I'm having a hard time typing because I used to type with my fingernails instead of the actual meat of my fingers. So it feels weird when I'm on my keyboard. I don't know if anybody's ever experienced that. Let's see. What are you guys trading out there today? Sarah Embre, what are the thoughts on Mark? Currently trading at 83 cents at 1.27. I'm gonna go look at it on the chart over here, and I'll give you what I think. I might compare it to a couple of the other DWAC related stocks here. So it's really got no volume. Its average volume is 9.14 million, and it hasn't even broke a million, and we're already past halfway through the day. I do not like Mark today. I'm not gonna lie, I don't like the volume on it. It can easily be moved up or down with just a single couple orders, so I'm very weary of myself making a play on Mark. I don't currently hold any Mark, but just looking at that volume on it scares me. That being said, it is kind of tied to a couple of these Trump-related DWAC stocks, and DWAC is barely up of 1% today at 69.55. But Fun, which kind of sometimes moves on its own away from DWAC, but does tend to move when it moves, is doing a little bit differently, I think. Let me check on Fun's percentages. Up 4.41%, currently trading at 237. Fun, on the other hand, here, it's got 7.2 million traded with an average volume of 23 million. So Fun is still down on volume too. So honestly, to answer your question on Mark, just looking at the volume on Fun and Mark, I'm not getting in plays on either one of those today unless I see massive turnaround on DWAC, just because I don't like the volume on either one of these. And they're kind of trading sideways, so they're kind of choosing which way they want to go at the moment. That's just my opinion. That's not any advice or anything, but that's just my opinion on where Mark is at and where it's going to. Don't do that, Odie. Oh, no. Birdie Hunter looking at calls on CIDM. Good call. All right. No, Birdie, you always playing that opposite AMC, and you tend to make some good money whenever you're going your moves on CIDM. I know you've been trading that for a while. Clown baby, I hope you are feeling better today. I know you were having migraine problems yesterday, so I do hope 100% that you are feeling better. Oh, Lobo says, Odie, do you want the lecture I gave my lady for biting her nails? Lobo, to tell you the truth, I've got the worst lecture of them all, and I know it by heart. I work around a lot of plumbers. And that's one of the main sayings of plumbers is paychecks come on Friday, don't chew your nails, and poop falls downhill. So I know not to chew your nails. That's right. The bacteria that's underneath them is nasty, man. It's disgusting. I shouldn't chew on them. And I'm a person that deals with strep throat, or at least used to, before I quit smoking. So I can be very, very susceptible to bad bacteria. That's right, Mbappa stock. You got me to say it. Green Day, yay, yay. John Rion, hope you're having a good day today. Says, hope all are well. So much green here, starting to look like spring is just around the corner. That's a good sentiment, John. I like that. Clown baby, I'm glad you are feeling much better. That's right. Third day in a row for XE. Is it third? It might be the second, but it might be the third. You might be right. Third day in a row for XELA on the FOMO list. I know it's the second for sure. Scott Runyon says, I chew on mine too. There are worse habits. There probably are. Yeah, there are. There definitely are. And at least maybe in some cases, some of the bacteria is my own. But yeah, anytime you touch something else, it gets underneath your fingernails and you end up chewing it. Birdie says he's looking at CIDM expiration date April 14th. Nice. You got a little bit of time on those to develop, and those were calls too. So I think you're watching the market thinking it's going to return sometime before then. Oh, am I a Bit Farms gang yet, Clown Baby? I had some. I've sold it. I've made money on it, and I know you have got to be happy today because if I think you, or if I know correctly, I think you are holding a whole bunch of different crypto mining stocks, and it looks like most of them are up today. That's a good day for you and anyone else out there holding all those the mining stocks. I do have a call on HUT, so things are looking nice. Things are looking nice. All right, I'm gonna step away for 1 second, guys. I'm gonna go see if we can get Jerome Powell fired up. I'm gonna make sure that we have it first. I think it's gonna be happening any minute here, but I want to check with the powers that be to make sure we can get it going here. So I'm going to flip the camera off, leave you guys with some lo-fi beats for a moment, and I will be right back. We'll check on, make sure we can get Powell thrown up for you guys. So give me 1 second. In the meantime, though, while I'm away, maybe think of some stocks that you guys are looking at, and I will take a look at them because I'm interested in what you guys are possibly thinking about playing. Right. Let's see. I'm gonna find it. There it is. All right, guys. I'll be right back in a moment. Enjoy them lo-fi beats.
Sharply, falling 2 percentage points over the past 6 months to reach 3.9% in December. The improvements in labor market conditions have been widespread, including for workers at the lower end of the wage distribution, as well as for African Americans and Hispanics. Labor demand remains historically strong. With constraints on labor supply, employers are having difficulties filling job openings, and wages are rising at their fastest pace in many years. While labor force participation has edged up, it remains subdued, in part reflecting the aging of the population and retirements. In addition, some who would otherwise be seeking work report that they are out of the labor force because of factors related to the pandemic, including caregiving needs and ongoing concerns about the virus. The current wave of the virus may well prolong these effects. Over time, there are good reasons to expect some further improvements in participation and employment. Inflation remains well above our longer-run goal of 2%. Supply and demand imbalances related to the pandemic and the reopening of the economy have continued to contribute to elevated levels of inflation. In particular, bottlenecks and supply constraints are limiting how quickly production can respond to higher demand in the near term. These problems have been larger and longer lasting than anticipated, exacerbated by waves of the virus. While the drivers of higher inflation have been predominantly connected to the dislocations caused by the pandemic, price increases have now spread to a broader range of goods and services. Wages have also risen briskly, and we are attentive to the risks that persistent real wage growth in excess of productivity could put upward pressure on inflation. Like most forecasters, we continue to expect inflation to decline over the course of the year. We understand that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. In addition, we believe that the best thing we can do to support continued labor market gains is to promote a long expansion, and that will require price stability. We're committed to our price stability goal. We will use our tools both to support the economy and a strong labor market, and to prevent higher inflation from becoming entrenched. And we'll be watching carefully to see whether the economy is evolving in line with expectations. The Fed's monetary policy actions have been guided by our mandate to promote maximum employment and stable prices for the American people. As I noted, the committee left the target range for the federal funds rate unchanged and reaffirmed our plan, announced in December, to end asset purchases in early March. In light of the remarkable progress we've seen in the labor market and inflation that is well above our 2% longer run goal, the economy no longer needs sustained high levels of monetary policy support. That is why we are phasing out our asset purchases and why we expect it will soon be appropriate to raise the target range for the federal funds rate. Of course, the economic outlook remains highly uncertain. Making appropriate monetary policy in this environment requires humility, recognizing that the economy evolves in unexpected ways. We'll need to be nimble so that we can respond to the full range of plausible outcomes. With this in mind, we will remain attentive to risks, including the risk that high inflation is more persistent than expected, and are prepared to respond as appropriate to achieve our goals. To provide greater clarity about our approach for reducing the size of the Federal Reserve's balance sheet, today the committee issued a set of principles that will provide a foundation for our future decisions. These high-level principles clarify that the federal funds rate is our primary means of adjusting monetary policy, and that reducing our balance sheet will occur after the process of raising interest rates has begun. Reductions will occur over time in a predictable manner, primarily through adjustments to reinvestments, so that securities roll off our balance sheet. Over time, we intend to hold securities in the amounts needed for our ample reserves operating framework. And in the longer run, we envision holding primarily Treasury securities. Our decisions to reduce our balance sheet will be guided by our maximum employment and price stability goals. In that regard, we will be prepared to adjust any of the details of our approach to balance sheet management in light of economic and financial developments. The committee has not made decisions regarding the specific timing, pace, or other details of shrinking the balance sheet, and we will discuss these matters in upcoming meetings and provide additional information at the appropriate time. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Federal Reserve will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thank you. For the first question, we'll go to Chris Rugaber at the Association.
Thanks, Michelle, and thank you, Chair Powell. So it's expected that the Fed will hike rates perhaps every other meeting, but certainly in the past, the Fed has hiked at every meeting. So I just wanted to ask, are rate hikes at consecutive meetings on the table this year? Is every meeting a live meeting? And on that note, would the Fed consider front-loading some of its rate hikes, even if it doesn't raise every meeting? Thank you.
Thanks. So as I referred to in my opening statement, it is not possible to predict with much confidence exactly what path for our policy rate is going to prove appropriate. And so at this time, we haven't made any decisions about the path of policy. And I stress again that we'll be humble and nimble. We're going to have to navigate cross currents and actually two-sided risks now. And I'll say also that we're going to be guided by the data. In fact, what I'll say is that we're going to be led by the incoming data and the evolving outlook. We'll try to communicate as clearly as possible, move transparently. So, more to your question. We know that the economy is in a very different place than it was when we began raising rates in 2015. Specifically, the economy is now much stronger. The labor market is far stronger. Inflation is running well above our 2% target, much higher than it was at that time. And these differences are likely to have important implications for the appropriate pace of policy adjustments. Beyond that, we haven't made any decisions.
Thank you. Let's go to Victoria Guida at Politico.
Hi, Chair Powell. I wanted to ask, you were talking about the health of the labor market, and I'm curious whether you would characterize where we're at right now as maximum employment, and also along those same lines, obviously rate hikes on the table this year. Do you think that the Fed can raise rates, bring inflation under control without hurting jobs and wages?
Sorry, just getting both parts of your question written down. So I would say, and this view is widely held on the committee, that both sides of the mandate are calling for us to move steadily away from the very highly accommodative policies we put in place during the challenging economic conditions that the economy faced earlier in the pandemic. And I would say that most FOMC participants agree that labor market conditions are consistent with maximum employment in the sense of the highest level of employment that is consistent with price stability. And that is my personal view. And again, very broad support on the committee for the judgment that it will soon be appropriate to raise the target range for the federal funds rate. The other thing is maximum employment will evolve over time and through the course of the business cycle. In the particular situation we're in now, it may well increase. The level of maximum of employment that's consistent with stable prices may increase, and we hope that it will as more people come back into the labor market, as participation gradually rises. And the policy path that we're broadly contemplating would be supportive of that outcome as well. So the thing about the labor market right now is that there are many millions of more job openings than there are unemployed people. So you ask whether we can raise rates and move to less accommodative and even tight financial conditions without hurting the labor market. I think there's quite a bit of room to raise interest rates without threatening the labor market. This is, by so many measures, a historically tight labor market. Record levels of job openings, of quits. Wages are moving up at the highest pace they have in decades. If you look at surveys of workers, they find jobs plentiful. Look at surveys of companies, they find workers scarce. And all of those readings are at levels really that we haven't seen in a long time, and in some cases ever. So this is a very, very strong labor market. And my strong sense is that we can move rates up without having to severely undermine it. I also would point out that there are other forces at work this year which should also help bring down inflation. We hope, including improvement on the supply side, which will ultimately come. The timing and pace of that are uncertain. And also, fiscal policy is going to be less supportive of growth this year, not of the level of economic activity, but the fiscal impulse to growth will be significantly lower. So there are multiple forces which should be working over the course of the year for inflation to come down. We do realize that the timing and pace of that are highly uncertain, and that inflation has persisted longer than we thought. And of course, we're prepared to use our tools to assure that higher inflation does not become entrenched.
Thank you. Let's go to Nick Timros at the Wall Street Journal.
Good afternoon, Chair Powell. Nick Timros of the Wall Street Journal. I have a couple of questions on the balance sheet. The statement on the balance sheet today calls for significantly reducing your holdings. What does that mean? And then, apart from moving sooner and faster to shrink the holdings, are there any other ways in which you and your colleagues are seriously thinking about recalibrating this process? And finally, how much disagreement is there around how you should use this tool, including active sales rather than passive sales, or changes in the composition of reinvestments? Thank you.
So I'm afraid to tell you that those are all great questions, and they're questions that the committee is just turning to now. So we had a discussion, as you know, at the last meeting, an introductory discussion of the balance sheet and a teeing up of the issues. At this meeting, we've gone through and carefully put together a set of principles at a high level, and those are meant to guide the actual decisions we'll make about the pace and about all of the questions that you're asking. And I expect that this process will be something that we spend time on in coming meetings. I can't tell you how many, I can't tell you how long it will take, and then, at the appropriate time, we'll provide additional information. So the last cycle when we went through balance sheet issues, we did find that over the course of 2 or 3 meetings, for example, we did come to interesting and better answers, we thought. So we're just in that process now, and at the next meeting, we'll be turning to more of the details that you're asking about. I would say this: the balance sheet is much bigger. It has a shorter duration than the last time, and the economy is much stronger, and inflation is much higher. So, and I think that leads you to, and I've said this, being willing to move sooner than we did in the last time. and also perhaps faster. But beyond that, it's really not appropriate for me to speculate exactly what that would be. But I would point you to principle number one, which is the committee views changes in the target rate for the federal funds rate as its primary means of adjusting the stance of monetary policy. So we do want the federal funds rate. We want to operationalize that, and we want the balance sheet to be declining in a predictable manner, and we want it to be declining primarily by adjusting reinvestments.
So if I could follow on that, raising rates and reducing the balance sheet both restrain the economy, both tighten monetary policy. How should we think about the relationship between the two? For example, how much passive runoff is equal to every quarter percentage point increase in your benchmark rate?
So again, we think of the balance sheet as moving in a predictable manner, sort of in the background, and that the active tool meeting to meeting is not both of them, it's the federal funds rate. There are rules of thumbs. I'm reluctant to land on one of them that equate this, but there's also an element of uncertainty around the balance sheet. I think we have a much better sense, frankly, of how rate increases affect financial conditions and hence economic conditions. Balance sheet is still a relatively new thing for the markets and for us, so we're less certain about that. So again, I think the pattern we'll follow is to arrive at a timing and a pace and composition and all those things, and then announce that with advance notice, and it will start in the background, and then we'll look to have that just running in the background and have the interest rates again be the active tool of monetary policy. That's at least the plan. I can't tell you much more about any of the very good issues about size, pace, composition, those sorts of things. We'll be turning to all of those at coming meetings.
Thank you.
Thanks. Now we'll go to Neil Irwin.
Thank you, Chair Powell. It's Neil Irwin from Axios. Glad to be back. Sir, I was wondering if the volatility we've seen in financial markets in the last few weeks strikes you as anything alarming or that might affect the trajectory of policy. Conversely, to the degree that financial conditions have tightened some, might that be desirable in some ways in achieving your tightening goals?
So, as you know, the ultimate focus that we have is on the real economy, maximum employment and price stability, and financial conditions matter to the extent that they have implications for achieving the dual mandate. And you also know that we look at broader financial conditions, not one or two things, one or two markets. And what we're always asking ourselves is, are we seeing changes that are both persistent and material enough that of a change in financial conditions that they are inconsistent with the achievement of our goals? So that's how we're looking at that. And I don't want to comment on today's financial conditions broadly, but we're not looking at any one market or so. So that's how we're thinking. In terms of what we've seen, I would say this. We said at our last meeting, we published a summary of economic projections, the median participant expected 3 rate increases this year. And, it's 6 weeks, 7 weeks later now. And you have seen that our communication channel with the markets is working. Markets are now pricing in number of rate increases. Surveys show that market participants are expecting a balance sheet runoff to begin, at the appropriate time, sometime later this year, perhaps. We haven't made that decision yet. So we feel like the communications we have with market participants and with the general public are working, and that financial conditions are reflecting in advance the decisions that we make. And monetary policy works significantly through expectations. So that in and of itself is appropriate.
Thank you. Let's go to Howard Schneider.
For a year hi. Thanks, Chair Powell. Howard Schneider with Reuters. So for a year now, the statements reference the benchmarks for this initial interest rate increase. Now that we're approaching that moment, what are the benchmarks going to be for subsequent rate increases? I know you can't stipulate the path, but how should we think about the criteria for the next step and the next step?
Well, you're right. We haven't gotten to that point yet. We haven't made a decision yet, and we'll make that decision at the March meeting. we'll make a decision whether to raise the federal funds rate. I would say that the committee is of a mind to raise the federal funds rate at the March meeting, assuming that conditions are appropriate for doing so. We have our eyes on the risks, particularly around the world, but we do expect some softening in the economy from Omicron, but we think that should be temporary, and we think that the underlying strength of the economy should show through fairly quickly after that.
If I could follow, just on a related question, the December SEPs had this copacetic sort of set of circumstances where inflation comes down without the federal funds rate ever getting over the estimate of neutral. Given developments since then, do you still think that's a credible narrative for the ultimate path of policy?
My path is highly uncertain, and that we're committed to using our tools to make sure that inflation, high inflation that we're seeing, does not become entrenched. So a number of factors would be, it's not just monetary policy. A number of factors are supporting a decline in inflation, as I mentioned. Fiscal policy will providing significantly less of an impulse to growth. We do expect this year, although we do expect now that it will come slower than we had expected and hoped, that there will be relief on the supply side. So that too should lower these supply side barriers, which are a big part of the story why inflation is high. In addition, monetary policy will be becoming significantly less accommodative. So the question is, we'll be asking this question all year long, and that will be, are things turning out as we expect? There's a case that for whatever reason, the economy slows more and inflation slows more than expected. We'll react to that. If instead we see inflation at a higher level or a more persistent level, then we'll react to that. And again, we're well aware that this is a different economy than existed during the last tightening cycle, and our policy is going to reflect those differences.
Thank you.
Thank you. Let's go to Gina Smialek. Let's go to Gina. Okay, let's go to Steve Leisman.
Thank you, Mr. Bunton. Thank you, Mr. Chairman. Mr. Chairman, I have one sort of technical question and one question on principle. The technical question is, if you're going to discuss balance sheet at next upcoming meetings and you won't begin balance sheet reduction until after you begin rate hikes, it seems to technically mean that you won't or can't begin balance sheet reduction until the summer. Is that correct? That's the first thing. Second of all, you suggested that the with balance sheet running in the background, that you would possibly be raising rates and running off the balance sheet at the same time. That's sort of the technical question part of it. The principal question I have is, you said it's going to be running in the background, but the statement on balance sheet principle says the committee is prepared to adjust any of the details of its approach based on economic and financial developments, which suggests there's something of a reaction function associated to the balance sheet, and it won't be running in the background. So could you give us any a sense of the discussion or staff presentation on what is the reaction function surrounding the balance sheet? Thanks.
So let me start by talking about that last paragraph. So you'll remember during the last cycle that this process of building up and then shrinking the balance sheet is a complicated one, and it involves inevitably surprises. And so during the prior cycle, we amended our balance sheet principles a number of times. Now, we didn't intend to do that. Events required us to do so. So we got a pretty robust paragraph there that says we're free to do this at any time. And it doesn't mean we're going to, but if the situation turns out to be different than we had thought, we're not going to stick with something that isn't working. That's all that's saying. It's meant to be quite a general statement rather than a hint. So, I mean, I like to think that our philosophy of the balance sheet is embodied in these principles. So, the idea that, for example, the federal funds rate is the primary means of adjusting the stance of policy. that will determine the timing and pace of reducing the size of the balance sheet to foster the dual mandate, that will begin to reduce the size after we begin the process of raising rates, and on like that. I mean, those are all the things that try to describe how we will proceed. But it may be at a higher level to try to get at your question. Asset purchases were enormously important at the beginning of the recovery in terms of restoring market function, as they were right after in the critical phase of the global financial crisis. And then after, they were a macroeconomic tool to support demand. And now the economy no longer needs this highly accommodative policy that we put in place. So it's time to stop asset purchases first, and then at the appropriate time, start to shrink the balance sheet. Now, the balance sheet is substantially larger than it needs to be. We've identified the end state as in amounts needed to implement monetary policy efficiently, effectively in the ample reserves regime. So there's a substantial amount of shrinkage in the balance sheet to be done. That's going to take some time. We want that process to be orderly and predictable. And so those are some of the ways I would think this lays out our, the way we're thinking about this. In terms of the timing, I can't really help you. It just says after we get underway. So I would say we're going to have another discussion at the next meeting. And my guess is we'll have at least one other discussion at the meeting after that. And, we'll tell you as we make progress, and we'll start the process of allowing runoff and shrinking the balance sheet at what we find to be the appropriate time. I wish I could say more, but honestly, we haven't made those decisions, and we actually haven't even really had the important discussions on a lot of the details that we will have at coming meetings.
Thank you. Let's go to Craig Torres.
Chair Powell. Chair Powell, good afternoon, Michelle and Chair Powell. Craig Torres from Bloomberg. Chair Powell, at the beginning of the conversation, you said risks are two-sided. And I'm wondering if you can elaborate on what are the risks to the elusive soft landing. Is Fed policy a risk, over tightening, or what are the risks? And then second, Chair Powell, I have a quick administrative question. Robert Kaplan's disclosure of his securities transactions. In a couple of months, Chair Powell, or maybe sooner, you and I will file our tax returns and we'll list transactions and all kinds of things. And next to those transactions, we'll put dates. And Bloomberg asked for the dates of Mr. Kaplan's transactions. The Dallas Fed is not giving us the dates. And I don't see why this is a matter for the Inspector General or anybody else. I mean, why can't he give us the dates? Will you help us get the dates of those transactions? Thanks.
So you asked about the risks first. So, the one risk is that inflation risks are still to the upside in the views of most FOMC participants, and certainly in my view as well. There's a risk that the high inflation we're seeing will be prolonged. There's a risk that it will move even higher. So, and we don't think that's the base case. But you ask what the risks are, and we have to be in a position with our monetary policy to address all of the plausible outcomes, and that calls for us to be in position. We have an expectation about the way the economy is going to be evolved, but we've got to be in a position to address different outcomes, including the one where inflation remains higher. And of course, that is a risk to the expansion. We've been saying that what we need here is another long expansion, which is the kind of thing we saw over the last, which is the record long expansion. We saw labor force participation rise. We saw wages persistently higher for people at the lower end, and there really was no obvious imbalance in the economy that threatened that expansion. It could have gone on for years were it not hit by the pandemic. So we'd love to find a way to get back to that. That's going to require price stability, and that's going to require the Fed to tighten interest rate policy and do our part in getting inflation back down to our 2% goal. So I mentioned two-sided risks. A couple things. One, the COVID is not over, and COVID can continue to evolve, and it's just we have to accept that it's not over, and the risks to it can slow down growth, and that's sort of a downside risk from a growth standpoint. I would point to another risk is just further problems in the supply chains, which could slow down activity. And you see the situation in China as a situation there where that's their no COVID policy may cause more lockdowns, is likely to, and that may play into more problems in supply chains. In addition, there's what's going on in Eastern Europe and things like that. So there's plenty of risk out there, and we can't forget that there are risks on both sides. So that's there. That's what I would say. I know you've been all over this issue with my colleagues, Craig, on the issue of information. We don't have that information at the board, and I asked the Inspector General to do an investigation, and that is out of my hands. I'm playing no role in it. I seek to play no role in it, and I can't help you here today on this issue, and I'm sorry I can't.
Okay.
Thank you. We'll go to Gina now.
Thanks for taking our questions, Chair Powell, and sorry for my tech issues. I wonder if you could tell us a little bit about where your thinking on inflation stands today. The last time we saw an SEP back in September, we saw that you and your colleagues were projecting that inflation would sort of sink back down quite close to target by the end of the year. And I wonder if you still think that projection from December is a reasonable one, and if your thinking has changed at all, I wonder how you're thinking about that. And I also wonder if you could talk a little bit about the pathway to getting to that deceleration. Like how do we get from here, 7% CPI, to where you expect to be at the end of the year?
So I'd say, since the December meeting, I would say that the inflation situation is about the same, but probably slightly worse. I'd be inclined to raise my own estimate of 2022 core PCE inflation. Let's just go with that by a few tenths today. But we're not writing down an SEP at this meeting, but I think it hasn't gotten better. It's probably gotten just a bit worse, and that's been the pattern. So I think if you look at the FOMC participants, there's a range there, right, for a year now. And by the way, if you look at other forecasters, essentially all other macro forecasters who do this for a living, you've seen the same pattern. So, what do we think about that? Well, I think we wrote down rate increases in the December meetings, each of us individually, and I think to the extent the situation deteriorates further, our policy will have to address that. I mean, if it deteriorates meaningfully further, either in the time dimension or in the size of the inflation dimension. So that's how we're thinking about it. As I mentioned, though, I think it's part of this will be that the Fed, moving away from a very highly accommodative policy to a substantially less accommodative policy, and then over time to a policy that's not accommodative in time. I don't know when that will be. Those are the things that we're thinking about. That's part of it. Another part of it is that fiscal policy provided an impulse to growth over the last 2 years. That impulse will be less. In fact, will be negative this year, and so that's another thing. The other one is we will eventually get relief on the supply side. And, the ports will be cleared up and there will be semiconductors and things like that. Now, what we're learning is it's just taking much longer. So I think longer than expected. And that, I think, does raise the risk that high inflation will be more persistent. I do think we'll come off of the highs that we saw in the early part of this episode in the spring last year. But really, the question is going to be what is inflation running at? And so we'll be watching that. And our objective is to get inflation back down to 2%. It's also to provide enough support to keep the labor market healthy. The labor market is very, very strong right now. And I think that strength will continue. There's really a shortage of workers. We see it particularly among production and non-supervisory workers and people in the lowest quartile. You see very large wage increases. I mentioned some of the other indicators. So I think that's what we're looking at. And we're also, we realize, I think, as everyone does, that this outlook is quite uncertain and that we're going to have to adapt. And we're going to communicate as clearly as we can, but we're going to have to be adaptable and move as appropriate.
Great, thank you.
Thank you. Let's go to Colby Smith.
Thank you, Michelle. Chair Powell, when you talk about being humble and nimble about the path forward for monetary policy, does that also include the possibility of raising interest rates by larger increments and, say, doing a 50 basis points hike at some point if inflation does not moderate sufficiently? And should we interpret this approach as a departure from the gradual pace that we saw during the last hiking cycle?
So, as I mentioned, we have not made these decisions. We really haven't. And what I can tell you now, though, is that we fully appreciate that this is a different situation. If you look back to where we were in 2015, 16, 17, 18, when we were raising rates, inflation was very close to 2%, even below 2%. Unemployment was not at our estimates of the natural rate, and growth was in the 2 to 3% range. Right now, we have inflation running substantially above 2%. And more persistently than we would like. We have growth even in forecasts, even in the somewhat reduced forecast for 2022. We still see growth substantially higher than what we estimate to be the potential growth rate. And we see a labor market where, by so many measures, it is historically tight. I think in a way, the least tight aspect of it is looking at the unemployment rate, which is still below our median estimate of maximum employment. If you look at things like quits and job openings, as I mentioned earlier, and wages, you're seeing, and just the ratio of job openings to unemployed, you're seeing a very, very tight labor market. Now, we also know that labor force participation is significantly lower. It's a percentage point and a half lower than it was in February of 2020. Maybe a percentage point of that is retirements. Some part of those retirements are related to COVID rather than just regular retirements. So we think there is a pool of people out there who could come back into the labor force, but it's not happening very quickly, and it may continue to not happen very quickly as long as the pandemic is on. So that's how we think about that. We haven't made, to your specific question, we really have not addressed those questions, and we'll begin to address them as we move into the March meeting and meetings after that.
Let's go to Rachel.
Thank you, Michelle, and thank you, Chair Powell, for taking our questions. I'm wondering if you can talk to us about any metrics that the Fed uses to assess how inflation affects different groups of Americans, especially lower income earners. And are you worried that the Fed underestimates or can't effectively measure the impact of inflation on some of the most vulnerable households? Thank you.
So it's more a matter of, I think the problem that we're talking about here is really that people are on fixed incomes who are living paycheck to paycheck. They're spending most or all of what they're earning on food, gasoline, rent, heating, things like that, basic necessities. And so inflation right away forces people like that to make very difficult decisions. So that's really the point. I'm not aware of inflation literally falling more on different socioeconomic groups. That's not the point. The point is some people are just really in prone to suffer more. I mean, for people who are economically well off, inflation isn't good. It's bad. A high inflation is bad, but they're going to be able to continue to eat and keep their homes and drive their cars and things like that. It's more so that's really how I think of it. And we to control inflation for the benefit of all Americans, But part of it is just that it's particularly hard on people with fixed incomes and low incomes who spend most of their income on necessities, which are experiencing high inflation now.
Thank you. Let's go to Edward Lawrence.
Thanks, Michelle, and thank you, Mr. Chairman, for taking the question here. So year over year, inflation's at a 40-year high. The input costs for producer price index for all of 2021 was the highest on record. Some investors fear that the Fed might be moving too late. Now, you said no decisions were made on the path of rate hikes, but was a rate hike more than 25 basis points discussed today? And as a follow to that, because I have problems with the mute button, as a follow to that, you testified that the supply chain issues could be worked out by the end of the year. You talked about that today. The CEO of Ford, though, told Fox Business today that the chip shortage will last into 2023. So today you said inflation will start to ease this year. I want to drill down and get a timeline that you see as to when we could see that relief. Thank you.
So I would not say that I would expect the supply chain issues to be completely worked out by the end of this year. I do not expect them, and I have not expected them. What I would say, and I have been saying, is that I expect progress to be made in the second half of this year, mainly. Progress, because we're not making much progress. If you look at a ton of metrics, you can find some that suggest that delivery times are shorter and inventories in some industries moving up, but overall, we're not making progress. And things like the semiconductor issue they're going to be quite a long time. I would think they'll go more than through 2023. In terms of being too late, I would just say this: our policy needs to be positioned to address the full range of plausible outcomes, as I said, and particularly the possibility that inflation will continue to run higher more persistently than we'd expected. And we think we are positioned to make the changes in our policy to do that, and we're committed to doing that. And that's really where we are. In terms of your question about the size of rate increases, we haven't faced those decisions. We haven't made them. It isn't possible to sit down here today and tell you with any confidence what the precise path will be. But as we work our way through this meeting by meeting, we are aware that this is a very different expansion, as I've said a couple times, with higher inflation, higher growth, a much stronger economy. And I think those differences are likely to be reflected in the policy that we implement.
Thank you. Let's go to Mike McKee.
Thank you, Mr. Chairman. I'd like to sort of weave some of the strands of your answers together and ask you, as you start to reverse policy, what your goal is. Are you going to be raising interest rates until you get inflation to 2%? Do you want to go below 2% so that on average you get a 2% inflation rate? And because you said we have to protect the employment part of your mandate, is there some sort of circuit breaker that would stop you from raising interest rates on the employment side?
So no, there's nothing in our framework about having inflation run below 2%. So that we would do that, try to achieve that outcome. So the answer to that is no. What we're trying to do is keep inflation expectations well anchored at 2%. That's always the ultimate goal, and we do that in the service of having inflation. We get to that goal by having inflation average 2% over time. I mean, if inflation doesn't average 2% over time, then it's not clear why inflation expectations would be anchored at 2%. So that's the way we think about that. What was the last part of your question?
I was asking if you're protecting the employment side of the mandate, whether there's some sort of circuit breaker there.
Nothing like that. I mean, I would say you have a tremendously strong labor market, and you have growth this year at forecast to be well above potential. I mean, people are forecasting growth. If you think potential growth is around 2, most forecasts are significantly above that for 2022, and that's even with policy becoming substantially less accommodative. So the labor market's going to be strong for some time. Ideally, what we're trying to achieve is inflation getting back down to 2%. And we're trying to do that in a process that it accomplishes, that will also leave the labor market in a very strong position. And no one really knows what that will take. Again, I would say that it isn't just monetary policy that's helping inflation get down. It'll be supply side improvements, and it'll be less fiscal impulse in all likelihood. So, but monetary policy will do our job. It is our job to get inflation down to 2%, and a situation where the two goals can be in tension is a difficult one. But I don't really think they are here, though, because I think a really significant threat to further strengthening in the labor market in the form of higher participation over time is high inflation. And also, high inflation is taking away the benefits of some of these large wage increases that we're seeing now. So we do hope to achieve, and our plan is to achieve both of those goals.
If I could follow up, does the danger of tightening too much as policy works its way into the economy with a lag mean that you should go back to being more forecast dependent in making decisions rather than the state dependency you've been using as a framework for the last year and a half or so?
Dependency was particularly around the thought that if we saw a very strong labor market, we would wait to see actual inflation before we tightened. And so that was a very state-dependent thought, because for a long time we'd been tightening on the expectation of high inflation, which never appeared. And that was the case for a number of years. So in this particular situation, we will be clearly monitoring incoming data as well as the evolving outlook.
Let's go to Michael Derby.
Thank you for taking my question. I want to ask you, with the benefit of hindsight, and I realize, that is what it is, but do you feel that monetary policy and fiscal policy maybe did too much to react to the crisis, and that part of the inflation problem that we're having right now is because the government response, collectively was more than what the economy ended up needing?
So I think it's too soon to write that history, really. But what I would say is this. If you remember what it felt like at the beginning of the pandemic, literally the global economy shutting down in large part, including our own economy, and people going to their homes for weeks on end in masks, and there are no vaccines, and it could be a really long time to get them, and then you have economic activity drops by a shocking amount in one quarter. So there was a real risk of lasting damage. And I think Congress responded remarkably with the CARES Act, incredibly timely, very powerful. There'll always be flaws in these things, but in real time, it was a remarkable achievement. And we responded, and what we were able to do was, stave off a collapse of the financial system at the beginning and make time for what really needed to happen, which was the income replacement and then the recovery that Congress enabled with the CARES Act. So now that was a lot. And what we did was a lot. And, now, what we have now is we have the strongest recovery of any country. And we have a recovery that looks completely unlike other recoveries that we've had, because we've put so much support behind the recovery. And we're managing the relatively high class problems that come with that, which are high inflation and a labor shortage. So, and these are serious problems, very serious problems that we're working as hard as we can on. Was it too much? Again, I'm going to leave that to the historians. But in 25 years, we'll look back at this incident, which will be a 2, 3, 4, 5 year period, and we'll say, we'll have a much better basis to make a judgment about the actions that people took. But it was all founded, though, in a very strong reaction to a unique historical event. And I guess I'll have to leave it at that. I hope I'll be around to see how that looks in 25 years.
Fair enough. Thank you.
Thank you. Let's go to Jean Young.
Thanks, Michelle. Chair Powell, some investors are expecting the yield curve could flatten or even invert after rate hikes begin. Would that worry you? And how important is that risk in the Fed's consideration for adjusting policy?
So we do monitor the slope of the yield curve, but we don't control the slope of the yield curve. Many factors influence longer-term interest rates, but it is something that we watch, and you will know that from when we had this issue a few years ago. And we take it into account along with many other financial conditions as we try to assess the implications of all those conditions for the economic outlook. So that's one thing I would say. Another is currently you've got a slope, if you think about 2s to 10s, two-year Treasury to 10-year Treasury, I think that's around 75 basis points. That's well within the range of a normal yield curve slope. So it's something we're monitoring. We don't think of it as, I don't think of it as some kind of an iron law, but we do look at it and try to understand the implications and what it's telling us. But it's one of many things that we monitor.
Can I follow up real quick and ask if it did invert, would you tie it to U.S. fundamentals, or would it be driven by a much broader set of factors?
That's a good question in real time. Obviously, U.S. long-term sovereign debt is an important global asset, and the fact that our rates are so much higher than other risk-free sovereign rates around the world may put something of a ceiling on our rates. I don't know, but it would really depend on the facts and circumstances at that time.
Thank you. Let's go to Brian Chung for the last question.
Hi, Chairman Powell. Brian Chung, Yahoo Finance. Within the context of just the broad effort to normalize rates, would you describe what you want to do as a gradual hiking? And then secondly, within the context of hiking cycles, it's often the talking point for financial stability and wanting to make sure that asset bubbles don't emerge. Is that something that has also factored into the conversation as you start to think about hiking rates? Thanks.
I would describe what we're doing along these lines. This is going to be a year in which we move steadily away from the very highly accommodative monetary policy that we had put in place to deal with the economic effects of the pandemic. And that's going to involve a number of things. It's going to involve, and it does involve, finishing asset purchases. It's going to involve lifting off, and it's going to involve additional rate increases as appropriate. And we're going to write down in March our next assessment of what that might be. It's going to continue to evolve as the data evolve. We need to be quite adaptable, I think, in our understanding of this. The last thing we're going to do is we're going to have a couple more meetings, I think, to talk about allowing the balance sheet to begin to run off and do so in a predictable manner. And that's something that we will also be doing as appropriate. And I wouldn't, I don't think it's possible to say exactly how this is going to go, and we're going to need to be, as I've mentioned, nimble about this. And the economy is quite different this time. I've said this several times now. The economy is quite different. It's stronger. Inflation is higher. The labor market is much stronger than it was, and growth is above trend even this year, let alone last year. So all of those things are going to go into our thinking as we make monetary policy. And you asked about financials to have concerns in connection with our policy. Was that your question?
Yeah, within the context of other hiking cycles, it seems like worries about asset bubbles emerging as a result of easy rates has been part of that. I didn't know if that was part of the discussion today.
I would just say this. We of course have a financial stability framework, and what it shows is a number of positive aspects of financial stability. But you mentioned really asset prices is one of the four. So asset prices are somewhat elevated, and they reflect a high risk appetite and that sort of thing. I don't really think asset prices themselves represent a significant threat to financial stability, and that's because households are in good shape financially than they have been. Businesses are in good shape financially. Defaults on business loans are low and that kind of thing. The banks are highly capitalized with high liquidity and quite resilient and strong. There are some concerns in the non-bank financial sector still around money market funds, although the SEC is making has made some very positive proposals there. And we also saw some things in the Treasury market during the acute phase of the crisis, which we're looking at ways to address. But overall, the financial stability vulnerabilities are manageable. I would say.
Thank you very much.
Thank you.
That was the end of the press conference there with Fed Chair Jay Powell.
All right, guys, welcome back. Thank you, MIA. Thank you so much for getting that for us, you guys. Make sure you throw some green hearts in the chat there for MIA bringing us that. He's been working real hard at getting that sound to work through his system, and I believe he found a way to do it. Sorry about the reverb at the very beginning. That was my bad. That wasn't MIA's, but thank you so much for bringing that to us all. The reaction, of course, I think we all know what's going to happen and what is happening currently at the moment. Saw the SPY broke 430 into the 429s, and everything is currently tumbling. Yeah, I think somebody mentioned it really good in the chat, or really well in the chat earlier. Couldn't we just have one green day? Just one green day. Thank you again, MIA. I really do appreciate that. Let me get my camera pulled back up here, guys. Give me 1 second. In the meantime, I want to make a point. I wrote it in the chat there. Something's up with these bots that are coming in our chat here with these green eyes, trying to throw AMC FUD and show us all that they have control of manipulation and stuff. That kind of confirms something to me. I don't know if it does for anybody else, but the fact that a year later and on the week of the anniversary, to see all these bots cruising up in here all of a sudden, I don't know, doesn't pass the smell test, does it? Sure seems like something's brewing. And it shows me that maybe they're back because they still fear that the MOASS, the MOAS or whatever. Maybe that's the case. All right, guys, give me 1 second. I'm gonna get the camera pulled back up here. Be good to go. Get us through the rest of this 30 minutes of regular market hours and then into the after hours. Give me 1 second. And I know before we went to the Powell meeting, I had asked, what stocks you guys were possibly playing, because we were green at that moment. What are you guys looking at now? Did that change? A lot of stuff got red and might be ready for a play tomorrow because of this. I don't know if I'm going to necessarily go after anything, but everything I was hoping to cash in on by the end of the day just flipped around. So now I got to look for some new plays. All right, I'm going to get the camera here pulled up. I think that should be it. Yep, there we go. Cool. All right. Yo, API outage in Discord says limiting login traffic and booted me out. Tiny, that stinks. Yeah, probably restart your computer and try again. I don't know. I'm in and out of there right now, and I don't have any problems, and it hasn't kicked me out. If you guys do see me go off the screen for a second, I guess that means that Discord kicked me out. Odefro, break down OP for me. I don't know what that is. Like overpowered? I don't know what OP. I think OP in like video game sense means like overpowered, or like OP on League of Legends back in the day used to mean like the person was too strong in the lane or something like that. Yes, D grade. Yes, he was. Activision is a put that both he and I, and if you're in there with him, thank him for me. I wasn't looking at it at the time, and it went down. I was able to take a little bit of attendees. I'm gonna watch it fall a little bit more. Hopefully, I've got some time on it till February 18th on those, so I got a little more time. And I've been keeping an eye on Activision and Microsoft news. So with the Microsoft numbers down yesterday, not what they expected to be. I thought that was going to help today, so I went ahead and held on to them, and it looks like it's paid off. But the PAL meeting made it pay off even more, but not in the way I wanted it to, that's for sure. But thank you, D-Grade. I appreciate that. Let's see. Oh, hold on. Am I live? It kicked me back to top chat here. Sorry. Make sure I didn't miss anything. For any of you guys just joining me here, Ocean Pal. I don't know what it is, Mitchell. I have no clue what Ocean Pal is. Let me see what I can look into it. Global provider of shipping transportation services, specialized in the ownership of vessels. Ocean Pal. Ocean Pal is a global provider. As of November 29, 2021, our fleet consists of 3 dry bulk vessels, 2 Panamax, and 1 Capsize. Our fleet is managed by both Diana Wheelsman Management Limited and Steamship Shipbroking. We believe that we possess a number of strengths that provide us with a company advantage in the dry bulk shipping industries. Is this the next CTRM? I said the name. 3 ships. That's what they're claiming as of November 29th, 2021. So, yeah. I don't know if this one's even traded. I'm not even sure if this is a private or public company. It has a board of directors. There is a website for it, Mitchell. You might look it up. It is oceanpal.com. But yeah, I don't have too much information on this one. Let me come back to the chat here, guys. Okay. Richard Carver, what's going on there, buddy? Blizzard, Terplord, John Rion, Heidenreich. Hope everyone is having a nice day, at least the best we can. We got about 27 minutes here left in regular market hours, and then we'll roll into the aftermarket. No problem, Mitchell. Sorry about that, man. I wish I knew a little bit more about it, but I've never even heard of that one. Let me look at one thing real quick. So currently market, guys, let's talk about this. NASDAQ down 14%, Dow Jones down 0.80%, S&P 500 down 0.6%, sorry. It hit the lowest spot. It looks like it's starting to tumble back upward, and then it curled over just a hair, so it looks like we might have seen the worst of it. I want to see if it changed any of the top losers on the day here. Not much change in the top losers. Most of them stayed the same, so it doesn't look like stocks that were green went way red and completely changed. But as we all saw, AMC was up at 1.12% today, and now it's down. So stocks definitely went up and then took a directional change. SQQ currently up 1.16 on the day. SDOW up 2.34. For a moment there, they were actually down on the day. SPY back above 429, currently trading at 431.66. Let's see here. Top gainers on the day for the one day. You guys can all see them. We got EBON, LRN, GRPN, SRRA, PHCF, HUDI, LRIVIR. Is that? Oh, LRMR. Sorry. Laramere Therapeutics, Evolvus, EOLS. And Exo has kind of moved down, but it's still up there in some of the higher percents on the day. I'm looking at some of these other ones on the list that go down. Nothing that I think we've ever really called out here before. COS, though, is still up at 12.85%, trading at 861. Let me take a look at that, see how it did through the PAL meeting. COS got all the way up to 1005, and like we all thought everything else was doing, it did come down, but it didn't come down all the way that it ran today. It's still up, like I said, 13.85%, so there's still some good signs here that some of these meme stocks were able to fight some of this off. But we'll see. There was definitely an attack here. Thank you for that coffee, Heidenreich. And by the way, I did make some coffee during the PAL meeting. I was interested by some of the things he talked about there. Some of the stuff, the questions I thought some of the questions were really, really good questions. Some of the answers were runarounds, as we've all gotten used to. Seemed like another let's kick the can, wait for the next meeting, and we'll see where we're at. I think he's getting a little more defined in the things he's saying each month, because he is getting to a point that he's going to get narrowed down to where these questions are like, okay, but you said this for me and this for me. But we'll see. We'll see what the next one does. H2O Bubble says the Discord's okay for me. John Rion saying the Discord is having problems right now. So you guys, maybe the attack's not just here on YouTube. Maybe we're getting attacked there on the Discord. Just make sure you guys are being smart with all your passwords and your accounts, and you are not sharing them with anyone. Make sure you're not trying to pass out invites to our Discord. That should be going through management only. If you guys have a friend or somebody that you would like to invite, please ask Lindsay or Bulldog for that invite, because we did get bots attacked in there before, and we're trying to manage those. But I'm very sorry if Discord is having some issues right now. Brandy Powers, hello, how are you doing? Hope you are having a wonderful day. Adam saying, Turf Lord Birdie has half the world's wine glass supply. That's where the backup is. He's got vases full of them. Vases. Old Braden Farm says his wife has been yelling at the Discord all day long. So apparently there's been some problems for a while going on. Okay. I have not had any issues with the Discord today whatsoever. I've been in it most of the day, and it seems like everything is fine. Like I said, if you guys see me jump off the screen, or like you hear somebody come into the room and you don't see anybody's voice come on, that means I got kicked off. So we'll know. But like I said, I haven't had any problems. I'm waiting for it to happen now. I just jinxed myself, but oh well. Loki says he loved Birdie 2.0. I saw the video. Horribly, I've been sleeping in a lot these last couple mornings, and I've been missing Birdie's show or getting up in the last 10-20 minutes right before market thing, so I haven't got to see the full gist of the show and all the stuff implemented into it, and I need to, out of just respect, to do it. But I need to start getting up earlier and go ahead and watch it and that again. Being off has kind of set my sleeping pattern back a little bit. YouTube is not showing me live. Oh wow. Okay. Make sure you guys are hitting that live button. I realize you probably can't hear me saying that, but I'm going to type it in the chat here. Oh wow, Nunya says he just got out of a meeting and tried to log into Discord, and it is saying API outage. So we're having some major issues over there. Again, if you guys, you probably can't hear this, but make sure you're hitting that live button. Also, like to suggest anyone hit that live chat button up at the top, and you'll make sure you're not missing any of the live chat. You'll just get a top chat, which really isn't that bad, but you do miss sometimes, or at least I do. I'll miss some people's comments there. Let's see. Randy Stogner, can I borrow the katana in the corner? Yeah, we'll talk about that. It's actually what's it? Naginta. Yeah, basically a katana, but for a horse riding Japanese warriors, the backs of horses when they used to fight back in the day. I don't know why I have it. Thought it was cool, and I bought it. I've swung it a few times at some things. It's nothing. Nodachi. Maybe that's the right word. Maybe I got it wrong. Raptorland, you might be right. It might be Nodachi. Maybe it was Naginta, but it might be Nodachi. We will have to exchange our empty bottles at the liquor store now. I'm gonna start saving all my cans and putting them in the can banks if they still have those. Raptorland says he's been riding the Tesla roller coaster. I mean, it's been up and down. There was plays there to be made, and if you were able to do it, nice. Exela had another dip, John. Let me run over there and take a look at that. Anybody who got into it 2 days ago made double their money on XELA. There's no doubt about that. It was up today, and if it had a nice dip and gave people another chance to get in and then get another rise, good for them. I'm bag holding that one hard. That's literally my biggest bag right now that I cannot seem to get rid of. I've got 20 covered calls out on them right now. What did I sell them at? 250. And I got somebody to bite those the other day before this thing when it was still at 38 cents. And I got lucky as heck at that. So I'm hoping this thing runs to 250 because I would love for XELA to get off of my list and go away. I never want to trade that stock again. Raptilian says I'm up 500 on Tesla dips. Nice. Well done. Good eye and a way to pay attention. Twitter Discord is having an outrageous all day. Oh, wow. Okay. So people are complaining on Twitter about the Discord problems. Thanks for that, Rudy. Did you see that, Black Smudge? That's right, Randy Jackson. Why wouldn't you want it to get signed by Randy Jackson? Good point. All right, so let's look at some of these green stocks that are still up. I will notice that Camping World and Weyerhaeuser are now down on the day because of the Powell meeting, apparently. Tesla currently is green, 934, but it was a lot better earlier. LGVN is still up, holding that 12%. That's 2 days in a row this thing's been pushing, so that's kind of nice. I haven't looked to see how big of the dip it took there in the meeting, but it's still up 12%. Envis still up 3% after the meeting. BKKT up 3.85% after that meeting. Space has contracted. It gave up its expansion and has contracted a little bit, but still green on the day. Fun going back green, it looks like, now at 229. So I'm wondering if that means I need to go look at DWAC and see if it's coming off of a bounce here. Cost at 901, Terp Lords reporting. Thank you. Oh, Daniel K. XELA management has turned it around and will hit your 250 no problem. That's your opinion. Daniel, I 100% hope you are correct in that sentiment. I hope that is the truth. I have read nothing but positive news for the last 4 or 5 weeks on XELA. And it has done nothing but drop drastically. So I'm hoping something turns this thing around because it was getting scary. I don't want to say frighteningly. It was scary to look at this stock go from above $1 just so short ago and then all of a sudden be in the 30-cent range. It was ugly. So I hope that's the case. I really do. I would have done the exact same thing. Think that awesome. See you guys out there hitting that gamble up. A little bit easier to get them bull coins when you hit that gamble. Them slots and them heists not paying off so well lately, it seems like. See Fat Cat's trying to get that heist going though. All right. Groupon. $27 up. What is it? 21% on the day? Interesting. I do want to go over here and look at DWAC. I know we got a lot of DWAC holders here. A lot of people waiting to make money on other stocks that are related to DWAC. Where's my DWAC? I don't have. All right. So DWAC hit the low after the meeting. 66.62, 66.81. Is that what it hit the low at? Yeah. Starting to come back up from there, but it's not pressing hard, that's for sure. Volume on the day for DWAC. Average volume 7.79. Today's volume currently is 4.73, so we're only looking on half the volume that DWAC normally carries here today. And I think that was the same for Mark, or a lot less for Mark. I think I was mentioning that before the meeting. Fun, I think, was the same way as well. Not as much volume. We were kind of all hoping that today would be the day after these last 2 days would be a turnaround. It kind of looked that way, but not that much volume for a lot of these stocks that were running before that meeting. Not that much volume. AMC today, let's see, volume-wise, average volume 44 million. It is trading double its current volume, and we're seeing a lot of downward action in AMC today. We've seen that the last couple times where it's been up in volume. The action's actually been down. But the volume today, yeah, 73.93 million, but average volume being 44.39. So keeping an eye on that one. Got to start seeing some buying pressure to the green side at some point. All right, let me come back to the chat, guys. Sorry, I got the hiccups. Caesar C, what's going on, buddy? We got about 15 minutes here, guys, left in the regular hours of the market. We are rolling into the after hours right after that, and we'll see what happens to these stocks. If you guys are looking at anything, throw it my way. I'll be happy to go take a look at it. Also, I'm kind of, like I said, looking for plays for tomorrow myself, so if you see anything interesting you want me to go look at, I'm going to go peep it or I'll write it down. John Rion, I'm hoping to see AMC run up in the after hours. That'd be nice, wouldn't it? It'd be nice. I'd like to see it get back towards that 1760 in the after hours. Maybe come out of pre-market tomorrow morning, holding 1760, maybe $18. I think that's asking a lot at this point, though. We do. It would have been nice if we could have held up a little bit better. Looks like we're 0.56 up on the market day here on AMC, but at one point I think we were up 12%. So it would have been nice if we could at least held 5% or something. Rockfit 9.64 is the close we want for costs. That's the close you're looking for? Okay. I think somebody just came in was saying it was like 904. I don't think we have it on our list anymore. We need to bring costs back up here. Definitely need to get costs in here, at least for the next week or so. I might have to talk to Bulldog about that since we're coming up on that meme. The meme time. I don't want to change it right now because I know you guys are watching stocks, but I definitely want to get costs at least watching it. I guess it's over there on the FOMO list right now. Kind of talking to myself there, sorry. On Island Time saying markets will fly after hours. It's very possible. I think I'm trying to remember the last couple times that Powell talked that we had the down end of the day and then it kind of turned around in the morning. The next day, we saw green markets because, it was more of the same and everybody felt free to go back to what they were doing. So maybe that's the case tomorrow. Maybe that's the case in after hours today. Right now, it's not the case. But like I said, in most of those days that we've had Powell come out here, we've had a bad reaction to the Powell for the first couple hours. And then maybe later in the afternoon, in the after hours, it has gone up later on. So hopefully that's the case this week. No problem, Rock. And like I said, I want to keep an eye on that. And we're lucky right now because at least it's on that FOMO list. It is at $8.99 I'm seeing, but I'm going to keep an eye on it for sure. It's an important stock for everything. It's a pivotal stock. BBBY, COS, BlackBerry, all of these meme stocks that first ran last year around this timeline, those are all important. They're markers. They were the beginning of the Wall Street bets movement, the ape movement. They all began at that time. And whether or not people buy into them or not, these dates are being marked in people's brains and they may go back and try to buy them again, or they may be holders for a year and be like, you know what, I'm getting my tax returns here real soon, or I've got some more money coming in tax returns and I'm going to throw some more into AMC or more into COS or more into whatnot and see if we can get those things to go again. Toxic, it was eons ago. It went by fast, but it was eons ago, it feels like. It went by real fast. What do I think about DWAC run-up versus its long? Saucy, I think DWAC is going to be a run-up until February, and then I'm weary on what happens after February. I'm not a big believer in DWAC will produce anything more than Twitter does. It's a business, and they all have to abide by the same rules, whether they want to say free speech or not. It's a business. And, there are certain things that have to be done in the legal world to cover businesses, and I think as we get closer to that date, people will start to realize that DWAC wants to do all these things, but they're limited by laws that are already on the books, and that will make them not be as possible as they want to be in that sense. I think Gab tried it a long time ago, and Gab failed at doing what they wanted to do. So people fell out of Gab a little bit and came back to Twitter. So in the long run, I don't like DWAC in the long run. In the short run, I think DWAC's a great play for anyone who wants to catch a moving stock if they buy it at the right times or if they know what they're doing. Again, it's not my advice to buy DWAC in any sense, but there are people who have been able to make lots of money on DWAC on its upward movement since it was announced. That's just my opinion on DWAC, so that's where I stand. Fun, Mark, another 2 plays that you can ride the escalator up. Not you or anyone. Again, I don't want to be giving advice. These are what I could ride the escalator up. Let me put it that way. I can ride the escalator up on Fun and Mark while it's going up. I'll use that to make my money. Anyone know what's going on with XCure? Has normal or has abnormal volume today? Let me look at that. Volume on XCure today, 68 million. Average volume, wow, 4.5 million. That is abnormal volume. By 64 million more shares traded in one day. Wow, that's interesting. I have no idea what this stock is. I'm currently looking at the profile, a clinical stage biotechnology company. The company is engaged in developing the therapeutics for neurobiology, immunobiology, inflammatory diseases, and other genetic disorders. I do not see any news on this stock. I have no idea what made 68 million shares get traded today on it. It went down in price. And if you go look at large order scales in the last 5 days, as of 126, there was a lot of sells. So I would assume in the next day, we are going to see, just by looking at what I see here, we are going to see a large amount of either logical FUD or maybe just BS FUD being thrown out about XCure, and this stock tanked. And it's not trading very high right now. It's at 16 cents. So maybe this thing gets destroyed in the next couple days, but a lot of people just sold out of it. Maybe they're taking their profits and they're going to get a new position. That's another way to look at this stock, but I would have to do some more research to understand what is going on. I hope that's helpful. I would not say anyone even do anything with this stock until they have DD'd the heck out of it. DD the heck out of this thing, at least in my opinion. All right, let me come back to the chat. See, oh, nice, okay. Oh, sorry, cheers. No problem, SPK. That's what we're here for. Again, that's a stock that needs massive amounts of DD to understand what's going on in that one, for sure. Good afternoon, Megan. I see your message there. I feel you. I feel you. We all watched what happened. I hope you're having a better day for the rest of the remainder of the day, at least. Again, if you guys are out there and you're having any problems with the Discord, we're getting messages from all around that they're having an API login problem. So it's not on our end, it's the entire Discord. Hopefully it's back up and running and we can get stuff going smoothly up in there. But again, it's not on our end. That is on the major Discord website from what I understand here. Look at a couple crypto prices while we're here looking at a red market. I kind of want to see what cryptos were hit at all or if reacted to anything that happened there in the last few hours. So it kind of looks like BTC, I wouldn't say it started to return. I don't have a real good chart on it right at the moment. Hold on. I can go through Weeble. Hold on, let me go this route. Really? It doesn't look like it did much. Didn't take a hit. Didn't go up, but it didn't take a huge hit. That's for sure. We did see highs today. 38,924, 924 on Weeble is showing. Is that today? Yeah, that was today. But currently trading at 3,734, and like I said, it didn't really take a bad hit, so that's kind of at least a good sign for crypto-wise. Everything on my crypto watch list is green, except for XLM currently at the moment. I'm sure there's something out there that's red, but crypto not looking as bad from the results of that. Junk, I kind of agree with you. Pull the Band-Aid off. Just rip it off and let's go from there. Oh, thank you, Birdie. I appreciate that. I got like 5 different pages up, and CMC or Coin Market doesn't really have the greatest charts, and I don't like Robinhood's charts, and I got all that on my side computer, but whatever. Yeah, I appreciate you putting that up there. Thank you. Gate.io does have some decent charts. Still, yeah, I'm still laughing about the junk savvy comment. It's true, and I honestly think it's true or right. We just need to. Oh, let's see. Let's click into it. Yeah. Sorry. Getting one thing pulled up there. Yeah, Harley. They're having some issues with Discord today. They're having some login issues across the board, from what I understand. It's not just our Discord. It's from Discord all over. So I'm sorry about that. Hopefully they get it up and running and get everything smoothed out. But it's not us. It's just a Discord full thing. Does anyone know if True Social will have a ticker? Megan, yeah, I think Andre's right with this. True Social is under the umbrella of DWAC. I don't think True Social will have its own ticker. It's not a private or a public traded company yet in its own right, like Twitter is, but it is under the umbrella of DWAC traded. So, it's kind of like KFC is under the Yum brand. DWAC is under, or True Social's under the DWAC brand in that sense. He does have bad foreplay, Junk Savvy. He definitely does. Yep. Blizzard's having the same problem. Yeah, and Birdie Hunter's confirming that. There are lots of complaints on Discord worldwide right now. So it's literally not the Bulldog Trading Discord, guys. It is the entire Discord is having problems. Gas cop, another red stinky day in this walled street. Minty green tendies are hard to find. However, I won't stop until the job is done. Hashtag gas cop. Yeah, just lots of Discord problems going on, guys. Lots of Discord problems. Let's see here. Hopefully, like I said, we get that all worked out at least in the next couple of days, so we can continue to do everything we do in the Discord in the evenings. Oh, by the way, Bulldog and Lindsay got something going here this last couple of days. It's kind of a cool thing. I know a lot of other Discords, especially the paid ones out there that you guys probably all know about, they do live trading in their Discord. And it's just people are over there. They do, a person live trading. But here at Bulldog Trading, we've got something called the Degenerates Trading Channel. It's in the Discord. And it's a great place to go. There is a gentleman over there, Enzo, who is a really good trader. And he's doing live trading. None of his plays are things that you are... none of it is advice. Let me put it that way. But it's a great... Oh, that was the end of the market bell. Sorry. None of it is advice over there, guys, but it's a great place to go during the day and just talk stocks. You can watch trades being done. You can ask questions, and maybe he can help you with understanding processes and how to do certain things in platforms. And I just like to go there and watch how he makes his strategies and how he does his stuff. But awesome new thing there in our Discord for everyone to take a gander at. See if it works for you, if you like it. It's not going to be for everyone. Some people like the quietness of trading their own, but some people want to do it out and open, and it seems like that's a really good place. I do like it. It was a really cool thing, and I'm glad that they brought it here for the channel, and I'll take advantage of it most I can. Currently, at the time, you can't get the Discord to go see this thing, but sorry. It's something when we are up and running again, or when Discord's up and running again, check it out. It's going to be there, I'm pretty sure daily. There might be days that he needs to do, it won't go on, but I'm pretty sure it'll be there weekdays. Very, very fun fun thing to try out and just check and see. Heidenreich saying Tesla earnings soon. Excellent. Is that today? I wonder if we do get some nice earnings statements. I know they're all coming around. Pull that up, see if I can find. We got some after-hour earnings. What's today? Today is Wednesday. 6 earnings reports. You guys talk to yourself when you type? I do. Oh, 27 minutes ago, Tesla reports fourth quarter earnings after the bell. Okay, this is just a news thing I'm seeing off CNBC. Tesla reports fourth quarter earnings for 2021 on Wednesday after the bell. So apparently that's about to happen. CEO Elon Musk has promised to give a product roadmap update, and the company's heavy-duty semi-truck experimental Cybertruck pickup and factories underway in Austin, Texas, Brandenburg, Germany are likely to be in the focus. Okay. The expected earnings per share adjusted is supposed to be $2.36 according to this article, and the revenue expected to be 16.57 billion. These are per Revfinitiv. I'm assuming that's I'm not going to lie and say I know what that company is. I'm assuming that's a higher up company that does these type of things. But that's what CNBC is reporting. So we'll keep our ears open for that. Bulldog Trading coming in saying the desktop Discord is mostly working, he thinks. So that's a good sign. I know a lot of you guys are using the app on your phone or a tablet. I do use the the Discord desktop, and I don't have any problems today. So maybe that's one of the things that's not having issues. Mr. Powell, not Jerome, says that Jerome is an 816 and he drops the market every time he opens his mouth, and I don't think anyone can deny that. At least the drops the market part. Stockwitz is having a hedgy bot day today too. Figures. Not surprising. Timing and all of these things is essential, I would assume. Rockford says, I can't type without biting my tongue. Brandy saying that she's in the Discord on Enzo's channel right now and on her laptop and having no problems. That's a good sign. So the desktop stuff's not having problems, it seems. It's just like the apps and things like that. Maybe it's just app-related stuff they're having issues with. Tom Boom says, finally a breakout. What are we breaking out on? What do we see? Stockwoods has been HedgeBot server. Yeah, GTA. I think a lot of those places are where they seem to congregate, and then sometimes they find their way over here. I do believe they are paid, though. I do believe that when we see the people with the laser eyes come in, that they are sent. Tiny Boxes says, my desktop still won't let me in? Oh, okay. You're still having problems on all ends. Oh, your bull coins. All right. Oh, Tom Boom, gotcha. 250,000. Nice. Well done. Same with the phone here on the West Coast. Okay. Thank you, Tiny. Yeah, 250,000 bull coins. That's nice. You guys you're getting there. You know, we've got some leaders on the top of that bull coin starting to move up there, especially since poker wins and whatnot. That's right, Tom Boom. You got past it. I remember when we first had the 100,000s getting past. That was crazy. Now we're looking at Daniel Billionaire is about to cross 1 million. Rockbit says Junk Savvy's replying to Rockbit saying that they flooded in when we got close to 18 and 16. Those are the critical price points for them. I don't disagree with that. I especially saw them when we got to that 1760 region and we were looking like we might press 18 there for a little bit. That's when they seemed like they got unleashed. What, like an hour before PAL? An hour and a half before PAL? This is right about the time I handed off from Snap. I had already seen you guys talking about them earlier in the morning, though. Oh, wow, Rockfit. Oh, absolutely. I've seen several waves of job ads for them over Twitter and Reddit this whole year. Wow. Dude, if you ever see those, get pictures and put them in the Discord for everyone to see. I'm serious. Like, I've never seen them, but I want to see them. Yeah, Daniel does have the currency hacks. It's true. I think I'm going to start switching all mine to SEC money or SEK money, whatever it is. Collect my bull coins. Oh, sorry, guys. Check something here real quick. Oh, is that what I think it is? Wow. I just got some great photos. Those are amazing. And I love the jersey. That's awesome. Send everyone my love. That's awesome. Stanley, that's great. I just got some cool pictures from Stanley and Pauline. That's awesome. That makes me smile. Brandy Power saying Tesla is oh wow. Tesla 895 now. It was up to 945, I think was the high I saw earlier today. Pull that one up real quick. 987 was its high today, guys, and now trading at 885 or a low at 885 right at the end to the after hours. Currently trading at 899 and moving. Lots of twitchiness to this. Wow. Oh, okay. Stanley, I see your message, and if we can, we'll get that worked out here in a little while. Sorry, I hope Discord. I think that's maybe what you're trying to do. Okay. Sorry, guys. I'm talking to Stanley. He's text messaging me at the current moment, but a little bit of problem with the Discord there. So he's got some cool pics he wants to get posted. Hopefully, we can get this worked out. Everybody can get to see them because they are cool. Just to bring it back here again, Tesla at 897. This is amazing. I do not have powder to buy this, but I would buy this if I had powder. Would definitely buy this. Oh, just looking at that. It is moving too. It is sharing some shares right now. 883 is the sale price currently being bid for right now. We are falling hard. 880, its new low. Oh, man. All right. Come back to the chat. Everybody keep your eye on Tesla here. AMC now down 1.37 on the day. GME still green on the day, guys. LGVN still green on the day. ENVA is still holding green on the day. BKKT still green on the day. So we got some at least good things. It's not all red here. The end of the day was kind of a moment, I guess, to be said. But yes, I do too, Tom. I think tomorrow will be a better day. Yeah. I saw you saying that yesterday. I did see you saying that yesterday. Guidance is only the thing that matters right now. Earning means squat. I kind of agree with you, just in the sense that I've been burnt on earnings plays this year, and it doesn't seem like earnings mean squat to anyone, even if they're really great. Oh, is Birdie taken out? Sorry, I was looking at another screen. Birdie, have a good evening. Get some rest. I will try to be there tomorrow morning. I do want to see the full 2.0 show, and I'm sorry I haven't made it the last couple of days. I've been slacking and sleeping in, playing poker a little too late in the evenings. But Birdie, have a wonderful evening. Have a glass of wine and enjoy your night. Rockfit, picture perfect bullish descending channel on cost. If you look at just today's charts at the 1 to 5 minute, let me look at it real quick. Ooh. Yeah. had a nice day even after the meeting. It's still nice gains on the day, but it's down from so much in the last 2 weeks. A lot of people are still holding that bag. Go out to the 30-minute here real quick. Yeah, December 7th, this thing was trading, or December 8th, was trading at $15. It just goes to show you what a month can do. A red market. $15 now, currently down to $8.78, and it's on a 2% gain on the day. It saw highs today of 10.05. So I'm gonna keep my eye on costs, and like I said, I've been watching it just because it's a meme stock, and it's on that date line, the timeline of the stock run again. But yeah, I see it. All right, let me come back to the chat here, guys. Oh yeah, let me get that for you guys. Sorry about that, Randy. Get that. One second. After hours list now. Go. All right. And just so let's just go look at that real quick. All right, markets, end of the day, NASDAQ down or up 0.02%, Dow Jones down 0.99%, S&P down 0.33% on the day. Advancers and decliners, I know I was calling it out, or oh wow. Wow, that changed. Okay, so earlier, before the Powell meeting, we were like 2,800 to 1,500 advancers over decliners. We have thus basically did a 100% flip on that. We are now 2,600 decliners over 1,600 advancers. So that meeting drastically changed the outlook of the market in one fatal swing today. It was very, very quick. Yeah, that's painful. We were in a good place before that meeting. Not so much now. All right, let me come back to the chat. Oh, no problem, Randy. Sorry about that. Get caught up here in the chat, guys. Might be, Lobo. That might be good for them. I don't necessarily want to say that because I don't want that company to be mad at us, so I'm not going to say it. But yeah, that might be good for the other company that you mentioned with the money symbol in front of it. Nufo, I expected AMC to dip harder today, but week not over. Hashtag still not selling. That's right. Raymond Saldana, rest of the week is going to be a bath. Yeah. Yeah. You know, Raymond, I don't agree with you there. I might be wrong, and I'll be willing to take this L if I'm wrong, but like I said earlier, I think after all these times that they've came out and kicked the can down the road, if I go back and check, I think I remember we had a green day the next day. So I'm kind of thinking we'll have a green day tomorrow. Maybe I'm wrong, and if I'm wrong, you're welcome to come back here and say odefro told me completely wrong tomorrow, and I'll 100% hold up to that. But I kind of do think we'll have a green day tomorrow. I'm not saying it's going to be unbelievably green, but I think most of those stocks on our list right there will be green tomorrow. Sasifredo says tomorrow will be rough for sure. I might pick up Tesla shares and check out some other deals. Gotcha on that. Gotcha on that. What a miss. After the conference call, we'll move higher, I believe. Oh, Hyde's talking about Tesla. Okay. Sasifredo just bought a Tesla share. Sabrina, 6-minute warning till the release of the info. Is that what I think? Jane Hammond says Tesla earnings are out. Revenue rose 65% year over year. Net income at 232 BUP. So that was just about right then. It's about 3 cents under what was estimated, because I think I'd said it was 235 or 236 per share. So they're about 4 cents low on their share estimation. That's not really, I mean, that's a lot of money when you think about numbers of shares, 4 cents over millions of shares, but being off just that little is not that bad, especially with what they had to deal with their Texas plant and all the costs to get electricity going while they were out of power in Texas and stuff through the year. Doesn't seem like that's bad. That is that bad. Let's see if it pulls a Microsoft. Saucy Fredo says it's possible. H2O Bubble says it says a lot about manipulation when one person speaks, and it changes a lot of lives. And true. It was very true. Harley Knight says it'll be a green. You're tomorrow's your birthday? Wait a minute. I'm sorry. Stanley, is it your birthday tomorrow? It's your birthday? We didn't know this? Happy birthday early. And for that matter, I think it's super. There ain't very many people that deserve more of a green day than you, Harley, for sure. Happy birthday, though. Oh, man. I wish I'd have done that earlier. Jane Hammond says Tesla reported 27.4 gross margin compared to 26.6 in the previous quarter. And some people are saying they might double down. Oh, Brina Bree, I got you. You gotta get that safety meeting in, guys. Get that safety meeting in. 3 minutes. 3 minutes. Dun, 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 dun. How you like owning some NFT? D-Grade, it's cool. I'm in the world now. I'm in the NFT world. Thank you for that. I do appreciate that, by the way. You and Mr. Wayne both got me into the NFT world. I really appreciate that. No Cappin. What if I told you Hezzy's? Let me read this real quick. Sorry. This darn scroll wheel thing. Hold on. What if I told you Hedgies and short sellers began targeting our gap fills on AMC? The unusual whale who placed the $11 bet is targeting our gap fill at 1023. And a while back, another whale targeted $15. Okay. I mean, it's very possible. That's a long ways to look back, and a lot of stocks to be traded to look back at some of those different gap fills. But it's very possible. Very possible. We're seeing returns back down to numbers none of us wanted to see. So, JJ James, it is a Wednesday. I do not believe there'll be cards tonight. If there's enough people wanting to do something, I'm sure somebody will throw something together. I'm not sure if I'll be around this evening. I may be putting in 7 hours here. I do have to go take care of my chores and stuff after I get off. Excuse me. But there may be some stuff going on in the Discord for sure. Just check it out. As always, go into that poker room, see if people are around. Go into the live events room. There might be fights or something going on tonight. But all you got to do is put the word out there usually, and somebody will get something going. TBC, Jesus is King. Anyone play Dank Memer in here? I have no idea what that one is. I'm assuming that's a game. Tesla is coming back, Hyde says. Back to 918, up 0.17. So it got down there to, what, 880, I think was the last low I saw it at. Let me look again. $879.87 was the new low. Currently trading at 910, 911. Still doing that flicker, or the Dinkum flicker. Up and down between 9.8 and 9.11 currently. So I am keeping an eye on that. Costs right now in the after hours, 878. Still holding that 2% gain. And I'm just kind of looking at these after hours gainers. Let me reset my computer. Make sure I got the right ones, the same ones that are up on the stream here. Reno Pharmaceuticals up 12%. ServiceNow, ticker symbol NOW, up 9%. LTRY, lottery.com, up 8%.